Let's say you thought, I'm going to fix for 1 year. James, what do you think your break costs would be? $800,000 fixed for 6.89% for 1 year on the 1st of March.
$500.
$4,163.
That's a lot of money.
Let's let that sink in for a second. Let's give that a pregnant pause. 4,163. That's an average. There are higher break costs at specific banks. Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today, break costs. How they're going to break you.
Don't break your rate. Your achy break your rate. Michael just doesn't understand.
Oh, I tried to. I got nothing to even chip in with there.
Michael, why are we talking about break costs?
Because they are back in your life. Look, a lot of people at the moment are thinking, hey, I'm just going to lock that rate in. When it comes down a little bit, I'll break the loan. There won't be too many break costs, like, I might be a little bit, might not be too much. But what they don't understand is how break costs work and how bad they can be.
So we're talking about the break cost on your mortgage.
Yep.
Why haven't we spoken about break costs in a while?
Because rates have been going up. And when rates go up, there are not usually break costs on your loan because those banks, generous as they are, can take that money that they might have given to you at 5% and they can resell it at 6%. And they go, don't worry about it. We won't charge you anything apart from this $30 to $150 break fee that we will charge you to actually break your loans.
Okay, so interest rates have now started to come down, which we've spoken about in previous episodes.
Yep.
Why do they charge a break fee when rates start to come down?
Well, they charge a break fee whether there is rates going up or rates going down. They charge a break cost when rates are coming down. The fee that they charge, the break fee, is just so that they can discount something for you when they're charging you a break cost. They go, oh, don't worry, we won't charge you that $30 fee or that $150 fee to break your loans. Break costs, they are coming in like a freight train. Now, when interest rates drop, the opposite to what I said before, the bank may have lent that money to you at 7% and now it's at 5%. And they go, well, hang on a second. I thought I was going to make, 50 grand here. And now I'm not going to make 50 grand. So you're going to pay me the 50 grand. And that is why, as interest rates are dropping, people's break costs are skyrocketing very quickly. And they are not based on retail interest rates. You might see no movement in the interest rate whatsoever. But if interest rates, wholesale interest rates, are coming down in the background, like the official cash rate drop, like the 1 year swap rate, like the Fed rate, your break costs can still be skyrocketing in the background, even though headline rates haven't moved.
For those who are thinking about break costs and break fees, don't worry. Unless you're an absolute baller, you won't get stung with a $50,000 break fee cost.
You don't think?
Well, I hope so. So, Mike, you're going to run us through an example.
Yeah.
You're going to give me some questions because I have no idea how these things are charged. They're fugazi, they're fugazi, they are nothing.
Yeah.
But you are not nothing to me, Michael. So tell me, ask me the questions about break costs.
James, I'm about to break your achy breaky heart. So
can't do it again.
I have run these calculations on as if you fix the loan on the 1st of March, right? 2024.
When you broke my heart.
Yep. An $800,000 loan. You fixed it around the 1st of March. And I've taken some averages across the banks because all of the banks have kind of different funding rates in the background. Now, James, $800,000. You fixed for 6 months on the 1st of March. What do you think the break cost is on that?
Have you told me the interest rate or no?
6.99%.
Okay, so in March, our relationship was solid. You hadn't broken my heart yet.
Your achy breaky heart yet.
$800,000 mortgage.
Yep.
I don't even know the math on how to... I'll say $1,000.
No, $0.
Okay.
There is no break cost on a 6-month loan. So because the duration of that is so short, you don't actually have very long left to run on a 6-month fix.
Very interesting.
So you're not going to get much. And break cost calculations, as you'll see, are a combination of the wholesale interest rate, the retail interest rate, and the amount of time or the duration of your fixed term. So let's say you thought, I'm going to fix for 1 year. James, what do you think your break costs would be? $800,000 fixed for 6.89% for 1 year on the 1st of March.
$500.
$4,163.
That's a lot of money.
Let's let that sink in for a second. Let's give that a pregnant pause. $4,163. That's an average. There are higher break costs at specific banks.
Wait, so I've only fixed for 1 year
Mm-hmm.
at an interest rate of 6.99.
8.9.
6.89.
Yeah.
What is the interest rate at the moment?
Do you mean the wholesale interest rate or do you mean the retail interest rate?
Michael,
This is the thing.
nobody's a freaking nerd going,
But this is the
what's
thing.
the wholesale
The
rate?
the 1 year interest rate 6.49.
Yeah.
But that has nothing to do with it. The wholesale interest rate, your retail interest rate could still be 6.89 and you would be paying a $4,163 break cost because the wholesale funding rate in the background is what counts. And banks are amazing at this. We look at the swap rates. When the 1 year swap rate shifted and none of the headline interest rate shifted, it's not the 1 year swap rate, it's the 2 year. The 2 rate shifts, it's not the 2 year, it's the 10-year bond. We look at the 10-year bond, that's just, it's the official cash rate. Now that the official cash rate is falling, they're finally starting to have to drop some rates, right?
For those listening,
Yeah.
does this make any sense at all?
It's not a banking racket. They're not like a gang,
Oh,
but they're
it's 100%
bloody
a
close
racket.
to it.
It's
Yeah.
100% a racket. George, does this make any sense to you whatsoever? I know you're talking swap rates instead of like the carded rates, but for the average Kiwi to be like, imagine the conversation being
This
like,
is why they have the $150 fee. Because they discount the $150 fee so they don't look so bad. They're horrible conversations to have. I sold a house recently, had to sell. It was the house I lived in and had to repay the money. I was fixed on 5.99%. I think I had 7 months left to go, 6 months left to go, or somewhere around that. And I got a $2,600 break cost, and they charged the fee.
the question on swap rates, how much did swap rates drop to result in that kind of fee?
About 1% over the last 6 months they've dropped. So March this year they were at 5.69. They're about 4.35 at the moment for a 1
I
year
guess
swap.
that kind of
So a
makes
pinch
sense.
over 1%.
So if you're going like say an $800K loan, a 1% swing, that's $8,000, and then they're going to charge you $4,000, and you're part of the way through it. I mean, now the math is starting to math to me.
So,
But these conversations that people are going to have, this is going to get really bad.
okay, well, let's get a little bit worse. Then we'll talk about what you can do, right? So let's go 800K. Let's say it's an 18-month fix. You're fixing for 6.75 1st of March. What are you thinking, James?
Okay, swap rate. So I'm just going to now
Just
apply
throw a
some
number
math.
out. Yeah.
Okay, I'm going to go $10,000.
6.5 grand. It's not too much longer.
I suck
Let's
at this, Georgia.
say you bounced it out to a 2-year fix at 6.75. 1st of March. What do you think it'd be?
8.
10 grand. 9,700, right? 3. This is where it gets interesting because this is where your durations start to kick out. So it's like a bond. The longer the duration, the more sensitive it is to interest rate fluctuations. So 3 years, 6.59, fixed on the 1st of March, $800,000, James. What do you think? How much?
13.
$17,153. Okay. 4 years, James. You fixed at 6.49. And remember, this is where your 1 year rate is at the moment. So you're still inside that band of rates that a bank reasonably is looking at.
20.
$21,938.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below. Now, James, I had someone a little bit before March fix for 5 years, right? And my advice was don't do it. And it was a pinch under 800,000, just over 700,000. And my advice was you need to fix for 6 months. That person, it was one of the couple, talked to their father, and their father was like, no, you need stability. So you're going to fix for 5 years. We had a phone call when he emailed me and said, I want to fix for 5 years. I called him back and said, no, I can't do that. He was like, no, I'm adamant I want to do it. I was like, cool. Here's an email that says why you shouldn't do it. You need to email me back and do it. And then I made him fix it himself online as well because I refused to do it. He was fixing around 720,000, right? So 5 years, 6.49%. If you fixed 800,000 on the 1st of March, how much do you think that break cost is?
25?
$25,323. That is horrendous, right? And this is why we say speak to a mortgage broker. If you get this wrong now, you could be in dire straits.
That's terrifying. I live in this world. I breathe in this world.
Yeah.
And I'm still just so shocked by those numbers and scared. And the thing I'm scared about is, you're right, a lot of people just make decisions for a whole range of reasons. Obviously, the main thing is it's like not their area of expertise. And the financial implications, we've spoken about, we think, interest, like a 1 year interest rate is probably going to be 5% by the end of next year. So this is going to become a bigger and a bigger topic.
Those will double.
Yeah, a bigger and a bigger topic as the OCR continues to drop, as these conversations continue to happen. People look and go like, why the hell am I on this rate? And they didn't get the right advice at the time. So the obvious
say
question,
if we ran this in 5 weeks' time after the next OCR drop, those will go up significantly again. Even though, like, you think about that 5-year rate, I cut another 1 month off that. It doesn't mean anything for the duration. You're probably talking like over $30,000 at break costs.
Yeah.
And $800,000, that's a first home buyer's home loan. If you don't get the right advice, you can seriously be stuck in a really bad situation. And it's not just, rates have come down, maybe I break and refix. No. You might have something go wrong in your family and you have to sell. You might need to stop working and have to sell. You might be in a relationship split and have to sell. There is a number of reasons why you might have to sell your house. And do not think that the banks are going to be like, okay, we'll just let this one slide. No. Absolutely not. They do not discount or not charge break costs.
Yeah. In the scenario somebody sells a house, you think about how many people have been holding on and waiting and going, I'm going to wait for my house value to jump and then sell. And they go, oh, great, I got another $50,000 for my house. And then the bank goes, I'll take $20,000 of that. Thank you very much.
Absolutely. And I'm not a tax person, so I don't really think about it that much. But I don't know how this would work if you had capital gains in there as well. Like, you might be in a situation where you're having to pay capital gains tax, but your break cost is actually killing you.
Okay, Mike. So the obvious question, that we haven't done many episodes where I've been like really shocked and surprised, but you got me good today.
Thanks, man.
The obvious question is, what the hell should people do?
Yeah, it's just speak to someone before you fix, It's not just about what is the least risk of you incurring a break cost. There are other factors to take into account. Maybe you do need stability, right? Maybe you do need that interest rate to come down a little bit, but just make an informed decision. Just have a quick chat to a mortgage broker. It doesn't have to be me. I would advise you not to chat to the bank because they're very limited on the advice they can give and the products that they can provide advice on. They can just provide advice on their products, but there might be better options out there for you. So just have a chat to a broker. 20 minutes, half an hour can save you a lot of heartache.
Yeah, and if we're talking generally...
Achy, breaky heartache.
Yeah, and if we're talking generally at the moment, right? I mean, the belief is interest rates will come down.
Yeah.
Somebody would have to have a pretty bloody good reason to be looking at longer term fixes instead of like a 6 or a 12-month fix, right?
Yep. We are usually advising people to fix for those shorter terms at the moment. I did have a customer yesterday who fixed on 18 months, but their situation meant that was the right thing for them to do. But yeah, shorter terms at the moment pretty much because you don't want to be stuck on what looks like a reasonable rate now. In 2 years' time, if you fix for 5 years, that's going to be hurting.
Yeah, and if we think about like financial literacy, which is the whole reason of this podcast, there's a lot of people with lower financial literacy, and they might go 3, 4, or 5 years is a lower rate than a 1 year rate or a 6 month rate.
5.99s at the moment,
yeah,
under 6.
Yeah, so they'll go, well, I'll take that, thank you, instead of this rate. So please have the conversation. Make sure you just understand the implications of what you're doing because they are some huge numbers. And made me quite scared.
Yeah, and they could get worse for you. Yep.
Yeah. So the big thing is with this episode is if you know somebody in a situation where they have a mortgage coming up, they have a mortgage in general, please share this episode with them because this is the kind of stuff that will make a huge impact to people. Much love to Partners Life for sponsoring this episode. Please make sure to subscribe to the YouTube channel so more people can see this. Give us a review, give us a like. And like Mike said, whether it's you come and talk to us at Lighthouse, you come and have a chat with Mike, you slide into his DMs, or you just go talk to the mortgage broker you've been working with already, just make sure you have the conversation and we'll catch you next time.
Cheers.